Right. Now that I've convinced you that style investing is the way to go, we have a new question, which is how to convert our style selection, into a set of shares that conform to that particular style selection. So to do that, I'm going to introduce you to a thing called a style slicer. And this spreadsheet that you see in front of you, you'll see the name is called Style Slicing, student version, and that's the one that you should have in your pack. And I'm going to use that. Its main sheet is this one here, where we've got 158 of your favorite JSE listed shares. All the way down, there's all the shares that constitute the all share index. We've got 158 in this case, and those are in rows all the way down. But the important stuff is going across left to right. And I've color coded these for you so that you can distinguish them. So to start with, I'm going to show you this. I think we've got 6 or 7 here. So let me show you. This stuff in blue, you can see this is market cap. It's the size of the share. And this might be a style, but different parts of the style are called different things. So we've got large caps and small caps and mid caps. And up here, there's a nice little pull down, this green thing. And if you just want to see the large caps, you can select the large cap and it will show you just 40 large caps. If you choose mid caps, you're going to only see the mid caps. And if you don't want to choose anything, you can just put it back to the double slash. What's the stuff in pink? Pretty in pink. This is the value or growth style. And here we're using PE, or the inverse of PE, the earnings yield, the earnings divided by the price. And so you can see shares that have got high earnings yields are called value, and ones that have got low earnings yields are called growth shares. Our third style here is industry sector. You can choose and limit by your sector, or just very broadly, you can go resources or non-resources. So again, up here, you can just go and choose resources, and there you go. You've got all 24 resource shares. Stuff in light brown is volatility. You saw in the previous session that in general, you probably want to go low volatility. It seems that low volatility in the past has tended to outperform high volatility. Here's an interesting one. We've got a 33% split, and that means that we've got neutral in the middle, 33, and we've got high volatility at the top end, 33, and low volatility at the bottom end. So if you wanted to choose shares that were all high volatility shares, you should have a third of them, 52, that's correct. And you'll see, look, nice high volatilities. Okay, here we've got some averages, etc. What's the average volatility here? Is 53%. Whereas if you went low volatility, let's see what that average is going to come out, not 50 anymore. I thought, look, 20%. So you are slicing along volatility lines. Right, purple. This is liquidity. We're using value traded. So if you want shares that are not traded a lot, there you go. Very slow trading volumes. And those tend, because of the illiquidity premium, tend to outperform ones that have to trade a lot, strangely enough. And finally, over here in green, last but definitely not least, is price momentum. How the price has changed over 12 months. 12-month price momentum, and this is simply low or high. And here is your high momentum. Lots of high movements. That average you'll see is like 28%, 29% in the year. Wow. How about low momentum? And instead of 28% in the year, minus 28. That's quite different. So let's go and make a setup here. Let's say that we wanted, I want value shares. So I'm going value. Right, I've got some value, and you can see over here on the left, it's cut it down from 160, 158. It's halved. So we've got 79. That's still a bit too many. Let's say we wanted low volatility. Boom, I'm going low volatility. That's taking me down to 31 shares. And let's say I wanted high momentum. Look at that. Instead of 158 shares, just by making 3 decisions to go value, low volatility, and high momentum, we've got 19 shares. Pretty cool, huh? You'll see where we haven't filtered. That means we've got mid cap and large cap and small cap still. Where we haven't filtered, we've got resources and non-resources. Where we haven't filtered, we've got low value and high value traders. So there's still some degrees of freedom there. So that might be your long portfolio. And if you wanted to make a short portfolio, you really should choose the other side of these things. So you'd go growth here, and you'd go high volatility here, and you would go low momentum there. And now you've got 18 shares. So another way to do it is to go to the student stock selector. That's the sheet to the left. So I'm just going to clear the filters here quickly. Clear filters. Go to the stock selector, and I'm going to let's start at the beginning. Here are a lot of shares, especially this one on the left, on the right. Okay, it's all 158. Okay, so what did we say? You wanted value or growth? I said I wanted value. I wanted volatility. I wanted the low volatility, and I wanted momentum. And so I wanted the high momentum. And so here you go. Here are the stocks. So these two lists are exactly the same. One is using the old style Excel without dynamic arrays, and this is the new style Excel with dynamic arrays. You get the same answers. So here you are ready to go and choose those as your longs. You can go and save them as your longs. So you could make a new sheet on the side and go and copy these and go and paste in your longs. You can call them your longs. Okay, your longs. We're going to come back for some shorts. So let's come back to the shorts. And how we're going to do shorts, we said value must be now growth, low vol must be high vol, and high momentum must be low momentum. Let's take a copy of that and go and put it in as the shorts. And the cool thing is we now have 2 portfolios that are definitely not overlapping at all. Slightly more longs and 1 less short, but we're ready to go. It's important to note that these stocks that have been chosen, all of those stocks are growth, are high volatility, and are low momentum all at once. We didn't have any say as to whether we wanted 18 shares or not. That's just what we got. I think there's a better way to do this, and that's instead of saying this and this and this, I want to make a scorecard where we add the momentumness and we add the volatility-ness and the value or growth-ness together into a scorecard. And so I've got a final method called a combination style. So we're going to use the same story where we want value and we want low volatility and high momentum. But this time we're going to combine them in a scorecard, and it's going to allow us to even choose the number of stocks we want. Watch this. Switch over to the pink. Here are all of the shares, all 158 going down the side. And I was interested in momentum, earnings yield, and volatility. And so I'm going to go and use a VLOOKUP. I'm going to VLOOKUP and get the momentumness that we had in that sheet. These numbers are all standardized numbers. I should point that out, that when we had all these earnings yields, for example, all these numbers, it's a better idea to rank all of your numbers, rank all of these things, okay, and having ranked them, also divide by the number, and that will give you a standardized rank, like a percentile for that particular thing. So even with momentum, even though we've got the momentum here, we want to convert it by using the rank function. We use the rank Excel's rank function here, and we rank it, and we finally divide it by the number, and that will give us a percentile. So that 18.5% momentum is actually telling us it's sitting at the 22nd percentile. And that's what we're pulling in here, standardized rankings. So this is Absa Bank banking group, and it's right in the middle, 51, 52% momentum. Earnings yield, it's way up there. It's near the top, 15%, and its volatility, it's middling again, but a little bit more volatile than usual. So look, we VLOOKed them up there, we VLOOKed up there, but remember we wanted high momentum and high earnings yield, but I wanted low volatility. So here's the trick. I must take my 100% and subtract the standardized percentile. So that is actually telling me how close it is to low volatility. At the top here, I've got 1, 1, 1. These are the weightings that I'm using. So I want the equal weightings at the moment, but I'm going to show you how useful they are. So look here, let's take AEL, electronics, whatever, and if I average those guys, I get 22.2%. You'll notice here that my statistic, which is the mommy vol, it's momentum, earnings yield, and volatility, it's just the average. Why is it the average? Because I'm multiplying all my numbers here by the weights and dividing by the sum of the weights. There's a little trick here. I'm adding a random number just to make sure I get a very distinct answer, because sometimes we get two rankings that are equal, and that upsets the sort. Right, here we go. So now I can rank all of my metrics. How am I going to get the best one? I'm going to go and use the Excel small function to find the smallest one, and then I'm going to do a VLOOKUP on that, and it's going to go and find the code matching that. So MET-AIR has got the best statistic, and the second best one, and the third best one, and the fourth best one. That's pretty cool. Where all the worst ones: Trendcore, Ascendus, Steinhoff, EOH, Brait, Blue Label, PP. Oh, these are terrible ones at the bottom, I think. Right, so we want to go long a bunch of the top ones. And I'm going to say, let's go long 22. I made up a number. And so we can use the offset function. Offset's very cool, and it will go and give us exactly 22. But I also want the shorts. I want to get the last 22, so this offset function will give us the last ones. If you didn't want 22, you wanted just 7. 1, 2, 3, 4, 5, 6, 7. Look at that, you got 7. But I'm going to use 22 for a nice diversified portfolio. These guys, they rank highly in terms of momentum and earnings yield and low volatility. These guys rank lowly in terms of momentum and earnings yield and low volatility. So my style, the alpha that I'm looking for in my hedge fund is going to be, let's go long this stuff and let's go short this stuff. They're at opposite ends of this new dimension I've made, this combined dimension of momentum, earnings yield, and volatility. Right, so we've come quite far. We've chosen our styles, and we've got some corresponding share codes for long and shorts. But what we don't have are the weightings, or the number of shares, or the rand value that we're going to need. But that is where the next lecture, the next presentation is going to take us. And that's going to be entitled Risk Mitigation. So this is the end of style slicing. Thanks. See you in the next one.